All right, we're live, folks. I think it was Sunday evening at I guess it's 6 o'clock my time, 5 o'clock Gerry time here, and this is the first options live stream we've done. I just thought it'd be nice to get out and talk about some options. There's been a lot of questions on some of my videos. I put out a recent community tab question and kind of just trying to get some feedback, what type of videos people want to see, and some questions get answered. But this is, the viewers' time here, and this is the, for the commenters and all that stuff that are people actually watching this. We were kind of really just want to be on this stream to answer some questions and, just debunk some myths. We'll talk to Gerry here. Gerry's been doing options for a few months, or quite a few months now. And he was completely new, and he picked it up and ran with it. So we're going to kind of get his story. We'll talk about my story as well, just a little bit, kind of maybe my background doing options. So I appreciate everybody joining. Gerry, if you want to, kind of just give an intro about yourself and, how you got started with options.
Sure. Actually, I got started with options about, I want to say 6 to 8 months ago. And of course, it was the encouragement from Mr. Dave here. And I still give that same advice to all new people. And it's just start with covered calls. Start with covered calls. So that's what I did. And then if you did that for a few months, and then for a couple months, I did some cash secured puts. And then, the last 2.5 months, roughly, I started doing naked puts in interactive brokers. And that has been quite successful. I've had some bumps in the road for sure. But they've all been learning opportunities. And, once you think you understand something, it kind of, sometimes things tend to bust you upside the head. And then you really get to understand them. So Good to be here. Hopefully I can share some experiences or answer some questions for you guys.
All right. Well, hey, thanks for sharing that. I know you've been through some ups and downs recently, so maybe we can touch on that a little bit later. But when we talk about a little bit of, some of the pros and cons, but originally, I planned on doing this by myself, but, talking to Gerry last night, he, was glad to come on and share, some of his knowledge and stuff. So some of the stuff I put down in the comments area or the description, maybe we won't talk about tonight, but maybe I'll do another one, or maybe we'll just do this every week. It just depends on whether or not people want to see something like this every week or something. So to answer Cloud Ninja's question here, is this gonna be a regular thing? It depends whether or not you want to see this every week or not. So just a little bit about my background. I've been trading options for about 13 years from every facet, really. I was a buyer originally of options, and kind of lost my butt on my very first option. It was in General Motors. They went bankrupt, so I lost all my money. It was $1,500 or so. And then I turned around and kind of started day trading options in about 2011 or so. And that was actually pretty good. Make 10 grand, lose 10 grand, make 10 grand, lose to 10 grand. So there's a little bit of knowledge I learned from day trading options. And I'm talking about buy-in premium. And then I kind of learned the best kept known secret here, not known, I guess, but best kept secret is selling premium. And that's what Gerry's doing. That's what I'm doing. And it is kind of I wouldn't necessarily call it a secret, but it is kind of a cheat code to life. Gerry can, attest to that. It's a game changer. So I started selling premium in about 2011, 2012 or so, doing cash or covered calls. And then I kind of learned the cash secure put side, and I've been doing that for quite a while now. And then, Gerry and I have kind of switched some of our strategies around. We do strangles now. And we also do poor man's covered calls, or PMCCs is what they're called, which is one of our new things we've been doing. It's a great way to leverage, get some leverage in there. Instead of owning 100 shares of Apple, you're kind of just owning the leap is a lot cheaper than owning 100 shares of Apple, and you kind of get the same benefits. So the cash on cash returns is much higher. So that's kind of my background there. I am up $6,000 for January with how many? how many trades was that? 94 trades in January for a $6,000 gain. Cash on cash return was about, I think about 3% return. That's not my goal. My goal is actually 2%. So it kind of gives me an idea of, how much, how hard do I need to work to make that 3% versus can I just dial it back to make the 2%? So I know, Gerry, that you've run into little issues in January. Do you want to just talk about that a little bit?
Yeah. It was kind of fortunate that I did. If some of you guys have watched my video where I've explained it, but I learned the lesson back in January. Well, let's go back to December, where I made like $6,500 cleared income off of doing cash secured puts and naked calls, leveraging Interactive Brokers. So in my mind, I previously owned businesses and ran businesses. So in my mind, I had this thought, that I need to beat last month's numbers. That was in my head. It's like a competitive thing. You need to beat it's like anybody, like runners or car racing. I need to beat my time. I need to beat my previous time, my previous best. And so I went into January with that mindset, and it was definitely the wrong mindset to go into. So I got into a trade the first week of January, and this stock ran up 100% in less than a month. And I got in a cash secured put at the peak. And I allowed it a 50% drop before it would have challenged me. And it didn't take but 3 days for that sucker to drop way more than 50%. So the moral of the story is, when you're running with these high moving stocks that move quickly, they can easily turn the other way and move just as fast back down. So luckily I took that lesson in the first week of January, and otherwise I could have been caught up in the GameStop debacle, where I've personally seen people lose a lot of money in that thing. Yes, there are some winners. There's people, for as many losers out there, there's going to be winners, but you're playing in a big fire pit is what you're doing at this point in time with something like GameStop. So I'm glad that I took that lesson in the first week of January, and I just stayed clear of GameStop. But I'll be honest with you, looking at it, it was like, oh, I could click a button. I could click a button and make some serious cash, but I already knew there's consequences. There's consequences to doing the wrong thing. So I definitely stayed out of that one. So like I said, this options thing can slap you upside the head sometimes. It will, but you just have to.
I don't want to scare everybody here.
No, I'm not trying to scare everybody here. It's really about discipline. Risk management
for sure. Don't get greedy, right? I mean, stick with well-known names here. Cloud can talk about that. I mean, sometime down the road, but we know personally of two people that lost $50,000 this week alone. All right, so trading GameStop and some of those other high flyers. Now, it's just not something I touched. Now, I did touch it, but it wasn't. I never put myself in a position where I was going to lose. I think $50 is the most I had on at one time. Like, I couldn't lose more than $50. So I ended up getting out with like a $10 loss or something like that. So, I mean, it's me just playing something stupid, but I almost did sell a naked call. I came very close to selling a naked call on GameStop. So what am I thinking? What am I doing here? Part of the thing is hindsight's 2020, right? We didn't know that there was anything going on behind the scenes at Wall Street Bets at the time. We didn't know that. We just thought it was just GameStop, good news come out or something like that. So that right there is a lesson learned. Luckily, I learned that from other people. and I just didn't sell it. I'm like, that's just dumb. Why would you break your own rules, Dave? Every one of us, Gerry can attest to this too. We all have our own rules, and we keep adding new rules to it or taking some off, right? Stick with, it was $10 billion plus companies. Now we're talking about moving that up to, 50 or 20, or even clouds talking about 100. So stick to the blue chips and all that. So we all have our own, our own rules and all that. And I do want to answer questions here because that's, one of the main reasons why we're here to answer some questions. Let me just talk about Frank's question here. What's a strangle? So a strangle, actually, Gerry, why don't you talk about that one real quick? That's a pretty easy one.
Yeah, strangle is when you have when you're playing essentially both sides of the trade. So you have a cash secured put. Say you're selling cash secured put on Apple for $100. You actually would sell the call side, say at 150. I'm just throwing out random numbers here. You would sell the call side for 150. So you're strangling it because you're selling it. You're selling selling it long, or selling it long and selling it short. So you're choking that sucker to try to squeeze as much income out of it as possible. And the advantage of that is usually, in interactive brokers anyway, when you put on one side of a option trade, the other side of the strangle doesn't take very much buying power to do so. So it's almost like a free trade and free money. You just have to be careful because that call side could, it can
unlimited loss, basically.
It's unlimited loss on the call side. So just be careful.
It is a smart way to go. Nokia, I guess see Nokia over there, but NVIDIA, I do have a strangle on right now. So I'm at the way above 52-week highs, and I'm way low as well. And just as Gerry is talking about here, it's literally a free trade. The market goes down, it's great because then you just can capitalize when the market goes down at the same time. And right now, my naked call on that is up 80%. And, so I can profit when the market goes up. I can profit when it goes down. This is not really a beginner's live stream here. I mean, some of the things that we're talking about may be a little advanced, but that's why we're here, just to answer some questions. We're talking about, cash secured puts, naked calls, strangles, PMCCs, and all that. Now, maybe some new terms, but we are going to try to do at least, debunk some of the myths and all that. I just had a thought in my head, but let me just answer this question here from Retire. He's a loyal follower, great guy. Do you back test your techniques, and if so, which platform do you use? No, I don't black test. I don't back test anything. I do look at a chart before I put on any trade, though. Just a simple technical analysis. It literally takes 5 seconds to look at a chart and look where support and resistance is, look where the 200 period moving average is, and then try to stick on a put below that or go way above. We're talking about probably in the monies a lot of the time. Maybe during this stream, we might talk about that a little bit. Gerry uses that. Pretty much uses that. If you don't know what that is, Interactive Brokers doesn't have it. Some people use Delta for that, but it's not quite an apples to apples comparison. So, Gerry, I mean, maybe you just want to talk real quick about, what do you look for right before you put on a trade? Like just, kind of go down the list of things maybe you look for.
I actually never looked at a chart. The whole December, I never looked at a chart. I literally flew by the seat of my pants in December. But when I took that, when it slapped me upside the head first week of January, I said, you know what? I probably should be looking at charts. So I decided to start doing that. But Interactive Brokers actually does have probability of profit in it, but it's not easy to get to. It's in the performance profile as you're placing your order. I think you can get it through there through the strategy builder and click on performance profile and you'll be able to see it. So what I do after looking at a chart now is I look at those probability of profits, and I typically like to be in the 95 to 100% probability of profit. Yes, they have 100% probability of profits. They're probably not 100%. They're probably 99.59 or something like that. They're probably not, because nothing is, absolutely guaranteed. But I like to be in that area on the put side. Now on the call side, I actually like to be in the 98 to 100% probability of profit range. Robinhood actually has that right on the screen, but on Interactive Brokers, you have to click on everything. On some other brokers, they don't even show it at all. So you might have to figure out Delta and all that.
Anybody that uses TD Ameritrade, TOS does have it. Let me see if I can share my screen real quick, because I'll just kind of, let's see here. 2 monitors. I don't have 2 monitors. Let's do this one. Can anybody see this screen? Can you see that, Gerry?
Yeah, barely.
Is it too small? Okay. Well, so I did write a script here to get the probability in the money from Interactive Brokers. So there's a probability in the money right here. All right, that whole column. And I kind of wrote in there percent from in the money. And then I put the rate of return, annual rate of return there. Now, granted, this is after hours, so the numbers are kind of funky right now. But so you can get it out of Interactive Brokers. Let me stop that there. I don't use the probability, profile or anything like that in Interactive Brokers. This just takes too long. I want to put a trade on. I want to put it on right now. I don't want to go in there and click on that. That's the only kind of downfall of Interactive Brokers, where TOS, for example, like you can just look at it right there against all the strikes, and it's like, I don't understand why Interactive Brokers doesn't do that, but it is what it is. Did I say GameStop? I might have. Cody there busted my fucking balls. I guess I shouldn't have said fucking, but let's see here. Options are not free money. Selling cash secured puts is risky. Yes, it's risky, but if you're on a solid company, I wouldn't really call that too risky. I mean, yeah, it's going to take a big market decline in order for it to, be tested, right?
I definitely wouldn't call it free money. I mean, we're selling 95% probability of profit, 98. Well, what does that mean? That means 2 to 5% of the time you're going to be wrong. So it's not 100%. There definitely some things, but you can manage risk. You can manage the trade. The thing with cash secure puts, you don't have to take assignment of that stock if you don't want to. With options, you don't have to own stock ever. And that's actually
unless you get assigned early.
Yeah, well, yeah, if you get assigned early, that's rare.
It's rare. Yeah.
You don't really have to own stock ever, and that's kind of my plan in my Interactive Brokers account, is never to own stock, never take assignment. So, there's ways you roll
on stock you truly want to own. That's an important piece of information that he mentions there, because there is stocks that I might trade options on. Spotify, for example, Shopify, that I really probably don't want to own, but they're not crap stocks either. They're not. I wouldn't even consider those meme stocks either, right? But there is more risk in those than there is, say, like a Microsoft, a Facebook, or an Apple, right? So, I mean, that's a good point there. If anybody's starting out, they want to start in options. I've been saying this for over a year now. Start with covered calls, all right? Because there's zero risk for you, all right? Covered calls, start with that. You had 100 shares of Intel. You should be long Intel. You should, if you have Coke, it's a very low price stock, right? 100 shares isn't going to cost you that much. Sell a covered call against those shares, all right?
Yeah, and it gets you comfortable with the mechanics of how options work. So, do that for a few months, watch, how it may get called away, try and roll one, hopefully one expires worthless. And that's like, the ultimate, buy one back, maybe for 50% profit and sell the next one. So covered calls is a risk-free way to learn the mechanics of buying to open, selling to open, options trades. So
that's a very important thing right there, because people, when they're starting out with options, they might just say, I sold an option. Well, what does that really mean? It could mean two things, right? So selling to open and buying to close, you got to learn those terms, right? Because you can buy to open and you can sell to close. So which sell did they do, right? So you got to know the terminology. When somebody's posting a Discord or an options channel or whatever, and they say, I sold an option, that really doesn't tell you anything. You don't know whether or not they sold it for a profit or they sold to open, right? So sold to close.
It really takes, especially the new people that have never had options before, it really takes your mind a little it messes you up a little bit, because you're conditioned to buy stock, and that's how you work, right? You buy, and that's how you accumulate assets. Well, with options, what we do, we sell. So it doesn't, we sell it, but we own it. So it doesn't make sense, right? We own the contract when we sell it. So you really have to train your brain to understand the mechanics of that.
Yeah, well, the paper trading would be great to learn the mechanics, but I've been saying this, I probably said this over 2 years ago, or whenever I started my channel. Paper trading is not really going to confirm whether or not you're a good trader or anything like that, because there's zero emotions involved. If anybody's played poker with fake money, don't you go all in on a crap hand and then you end up winning, right? That's kind of what happens when you get in a paper trading account doing options or day trading stocks. You go all in on the stupid stuff. So selling to open and selling to close, those are two separate things there. You got to understand that. And I've been saying this for a long time. This is one of the best things, one of the best, I don't even know how to say it. If you're a buyer of premium, okay, so you buy options, you're buying premium, so you're paying premium to somebody, you got to have three things right, okay? You got to have the stock right, you got to have the timing right, and you got to have the direction right in order for you to be profitable, okay? Why not put all three of those things on your side, all right? So the thing is here is we can sell a cash secured put, even naked puts, because we're doing naked puts most of the time. We can be wrong and we can be right and still win, all right? Now, we can be wrong up to a certain degree and still make money, all right? Why wouldn't you put all three of those things in your favor, get paid for that, okay? So that's a really important thing that I learned years ago, and that right there puts everything in our favor, okay? So if anything, you take anything from this live stream, take that from it.
Be the house.
Be the house. Is there any questions here that I missed or skipped? Okay. Maybe we can talk about this, because your account's somewhat smaller than mine. Now, you still killed it in December with a relatively small account. It was very impressive what you did, actually. But there is people with less than $10,000 accounts, right? And we've talked about this quite a bit. They typically maybe do an iron condors, which is really just two spreads on the upper end and the bottom end. Maybe they're doing spreads as well, most likely probably credit spreads. It's not something I do. We talked about this on Randy's Discord, which I'll probably just put down in the description. You can join Randy's Discord. In there, a bunch of us I think in this chat here are in there. You can ask questions in there. So if you want to learn a little bit more, join that Discord. So I'll put that down in the description. Maybe I'll put it in the comments here as well. There is people doing spreads in there because they're smaller accounts, so they actually need to, instead of putting on a naked cask or naked put, they're actually backing up or covering that, or whatever the terminology is, by buying the protection on it. But the problem with that is they're not going to be able to get as wide as Gerry and I are going. So they're not going to make as much money. Plus, they're probably going to be tested more often than Gerry and I are tested on our, way out of the money cash secured puts or naked puts. Do you want to maybe, talk about that? Or, I mean, maybe I missed something.
Yeah, as far as what Cody's saying here is affording options. It's a challenge with a smaller account for sure. Until I was introduced to interactive brokers, I was, piddling along trying to, do 100% puts secured by cash, cash secured puts. And that's a little tougher to make, money and turn a profit. I mean, you're going to turn a profit, but it's hard to, generate a substantial income. So once the interactive brokers thing came on, and Dave always touting it as, the best thing since sliced bread, I finally got in it. And, it's the buying power that interactive brokers gives you that really fueled the month I had of December. And they give you 4-to-1 buying power. And if you have account value worth at least 25,000, you can do day trades unlimited. You can't do that in any other account.
And just to let people know, you're actually not using margin.
Right.
You're not being charged interest or anything like that. You're not really using it unless you're assigned. So it's just one thing to note there.
Yeah, you don't use margin unless you're assigned. They give you buying power. Now, like I said before, you don't have to be assigned stock. You could roll options, you can close them, you can, do all that. You just like Cody was asking about NVIDIA options, that actually, Dave, you have one on, so you'll probably know the buying power effect, but I'm imagining it's probably around $4,000 or $5,000 is all you really need to sell a cash secured put and a call on NVIDIA. And that's just the way interactive brokers does it. It's a 10% requirement, and they give you 4-to-1 buying power on your deposits. So
I can't even tell what my I'm looking at the margin impact on it, and because I have a strangle on it right now, it's kind of not clear.
Oh, that's right. When you have both on, it's hard to do. But I would imagine it's a $500 stock. What is it?
Yeah. I mean, it was probably a pretty hefty amount, like because I do Amazons, it definitely takes a hit for sure. But I try to stick around the 50% buying power, and maybe on Fridays I'll actually go in a little bit heavier, push it up to 60% or something like that. Just to have to let stuff. I call them buns baking in the oven. So
yeah, so interactive brokers gives you a 4-to-1 buying power. So if you had the 25 grand in there, you have $100,000 of buying power that you can control stock. Now, you probably shouldn't use it all. That's probably not a good thing to do. It's probably not good management, but
and just to let people know, when you're actually selling like a put or something like that, it's not like, okay, if it's 100 shares of Apple, which is 100 and something thousand, 100 and something, 140 or 160 a share, or whatever, it's not $16,000. All right. It's actually it's like a tenth of that it's actually taken up in margin maintenance or whatever it's called. So it can add up. You can, definitely overextend yourself. It's something you have to, money management or buying power management is a big part of this, because if something goes wrong, it could push you into a situation that a lot of people ran into this week, where a lot of brokers were liquidating, positions for automatically without people even having any say in the matter. You don't want to be put in that situation. And I didn't get tested this week at all. I was completely fine. I obviously took advantage of the dead cat bounce and some other things, took off some winners and then put on a little bit safer stuff. And Gerry, you want to talk about how you did a little bit of management this week?
Yeah, I definitely I had to take some things off because I was running a little bit hot with that buying power, like I was saying. Because as the market drops, your liquidity dries up, essentially. So your buying power drops and your maintenance margin increases. So the faster that drop, when those move like that, you can get into a situation where interactive brokers can liquidate positions, whether it's for a gain or a loss, to maintain a certain level of liquidity in your account. So you got to be very careful getting too hot. I'm sitting a little hot right now. So I put in some defensive positions. Tomorrow I'm going to be taking off some positions that are in profit. So that will alleviate some of that pressure. So it's a management game of money. And you'll learn that as you go along. There's nothing that I don't know if there's anybody that can teach that. You just have to kind of experience it, and hopefully
you don't get scarred too bad or hurt too bad off of it. Definitely. I mean, if you're going to try to knock it out of the park and do a grand slam, you're going to get your ass handed to you. There's no ifs, ands, or buts around it. Definitely don't try to get rich quick here. Just to let you know, I mean, options are a great way to build wealth quickly. Okay. And I'm not talking about getting rich quick. All right. You can still get rich on a slower, quicker than you get rich probably any other way, honestly. But you don't have to go out there and try to hit a grand slam. Just get rich slowly. All right.
Yeah. That's
what I was talking about. Like Thumper the God, I don't think he's in here, but he's, if he continues what he's doing, he'll be a millionaire in like 3 years. Try to do that with something else. So the opportunity is there.
It's very game changing once you figure out the mechanics of it. You figure you could, I would say 2% a month is pretty darn easy
and safe.
And being safe. And if you think about that mentally, 2% times 12, that's 24% a year. S&P averages what, 7, 8, somewhere in there. So you're tripling S&P returns just by doing 2% a month in the options. But you definitely have to be. You're managing your money is what you're doing. You're managing your trades. You're managing your risk. That is key, managing your risk.
It's all about risk management. So as we mentioned, just 15 minutes ago or so, start with covered calls, maybe add in some cash secured puts. And I'm talking about cash secured at this point on stocks you wouldn't mind owning. I think Mark mentioned that earlier. It's a great point. That's probably where I started. Gerry and I are at this point now where we don't even want to take stock, so we'll end up rolling it, or we're going to have to get it. Most of the time, I mean, we haven't talked about days through expiration or anything like that. We haven't really talked about even what an option is. I think Sam here is asking what an option is, but this is really, I'm just trying to answer a lot of questions here. An option really is just, it's so kind of hard to explain. It's what is it? It's the right to buy something, but not the obligation to buy a stock. So you don't have to, I mean, we're selling premium, so there's a little bit different terminology there, because there's like two sides of the story. There's people that want to be chumps and want to buy the premium for some reason. And I don't know why, but somebody did mention in here, I'm kind of jumping all over the place, but because it's trying to get to these questions, somebody did mention leaps in here. We'll talk about PMCCs here in a second, but I did buy a leap. I think, Gerry, are you in CCL leaps too?
I am not in CCL leaps, no.
Okay. So it's the first leap I've ever bought in my life. So I bought leaps on CCL 2 years out. Okay. And a leap is just a long-term, it's technically over a calendar year. It's exactly the same thing. The options are no different. It's just a long expiration date, like 720 something days at this point. So I bought it at CCL. I don't think CCL is going to go bankrupt or anything like that. So why not capitalize when the stock goes up? The option value should go up. It's a little bit different strategy, but it's probably a lot safer than buying a short-term option that expires in 2 weeks, where you think CCL is going to go up in 2 weeks. And like I mentioned earlier, you got to be right on the stock. You got to be in the right direction. You got to be right on the timing as well. So I put, buying that leap, it wasn't cheap. It was like $1,500 to buy it, but most likely it will probably print money for me. I probably shouldn't have really touched on leaps because I don't sell leaps. To me, it's too far out, and you're literally probably costing yourself money too, because the shorter the DTE, the higher the return theoretically. Now it does require more work though.
I did sell a pretty long dated. This one I was trying to learn everything. I sold a long dated cash secured put on Realty Income and Tesla. And I'll tell you what, you go out that far, the value of it does not change. So yes, you might be able to sell that put that's 6 months out and collect $300 today, but you are tying up your buying power for that 6 months. So you can't do anything with that buying power any longer. That's the disadvantage of having the leaps, is the opportunity cost. So you've tied up that money for that long, because the further out you go with days to expiration, the less movement that those options go. You'll look at an option chain, today with, next week expiration, and those numbers are just moving. They're moving like crazy. But if you look at it 6 months from now, they might tick once here, once there, might go up a penny, down a penny. And that's what you're dealing with. So you're locking up that buying power when you do leaps. So buying leaps like Dave did, buying leap calls, is a way to bet on the company going higher within 2 years. That's what you're betting on when you're buying a leap.
Let's just talk real quick here about premium, because we're selling premium, right? And how the decay works. So let me just use an example on like Apple or something. We might look out 2 weeks on it. We avoid earnings if we can. And we're selling that option to somebody, and they're going to pay a premium for that to buy that option from us, or theoretically, right? And they might be paying us $50 in premium, extrinsic value. And that, let's just say it was 2 weeks, right? So 14 days DTE on it, days to expiration, okay? And that is going to bleed off every single day through something called theta decay, okay? So we try to take advantage of 3-day weekends or weekends, because it's like free days of decay. So every day, theoretically, our options, if the stock kind of remained the same, like right around like 140 or something like that, our option is going to go up in profit every single day because of theta decay. So they're working against theta decay, and that's working in our favor. But as Gerry's talking about, you go in a leap, that's 700 days there, of decay, and it's going to bleed off very slowly on a leap. But on a 2 week or a week, expiration, it's going to bleed off pretty quick. So they're literally running up against an escalator that's going against them, and that's in our favor. So they're working against time. Put that in your favor. I hope I explained that. I'm kind of just trying to touch on some of the basics here. Do you see any questions, Gerry, that we didn't answer or even get to, or?
Let's see.
Oh, this is a pretty good one.
What you got?
That's actually, I don't know if that can be answered.
Yeah, I don't think so either.
Because now I do have a bunch of scripts that I wrote, and you kind of could maybe see that in there a little bit. But so, implied volatility is going to affect the premium of the stock, but, typically the higher the implied volatility is, it could be a crappier stock. So it's not really something that I look for. We did go down that route for a while, literally doing a scan for high IV stocks that were above 10 billion market cap, but it's not something I really do anymore and even care about. I'd rather just be in some solid names. I do have a watch list with some solid names in there, and I can sort them by IV, and we didn't touch on Greeks, and I really don't want to because it's not really something I even look at all. Do you look at Greeks at all, Gerry?
No, I pay zero attention to it at all.
Okay. People that buy premium might look at it. They might look at Delta, most specifically, probably, but it's not something I care about.
I will look at Delta when buying a leap call, because that'll tell you kind of where the extrinsic value is zero, essentially, or where you can get into that. But that's the only place I'll look.
That's because you don't have my tool, Gerry.
What's that?
That's because you don't have my tool.
No, I don't have your tool. I probably don't even know how to run your tool.
No, probably not. So I did write a tool for PMCCs that looks out at those leaps. It calculates the midpoint price. It looks at the delta and then calculates the extrinsic value to try to figure out, because we're doing deep in the monies on those long calls, and try to extract all the extrinsic value out that we can. Let's see here. This is actually a good one because, oops, sorry there. This is as good as Tasty Trade. So yes, Tasty Trade, honestly, I found Tasty Trade in like 2014. And you talk about a wealth of information there. Tasty Trade is the place. If anybody asks, where should I learn options or whatever? Now, obviously YouTube, I can't vouch for anybody on YouTube. I can't even vouch for myself. All right. So I don't know anybody on YouTube. I wouldn't trust anybody on YouTube just because I don't know them personally. I don't know their strategies or anything like that. Definitely go to Tasty Trade. Now they have a YouTube channel, okay, so I can vouch for them for sure. Okay, Tom Sosnoff, the person I think wrote Thinkorswim platform, amazing platform. I think through TD Ameritrade, by the way. There's so much information there. You can get lost and go down a rabbit hole. So.
Yeah, I'd agree. I mean, I actually, I struggled with actually sharing that I was doing options with my YouTube viewers because I knew that there was going to probably be people that wanted to know what the heck were you doing, and it's definitely not something that's easily taught. So I referred everybody to Tasty Trade videos or Tasty Works. I forget which one it is, Tasty Works or Tasty Trade. I forget their name, but I think if you typed in either or in the YouTube channel search bar, you'd find them. And definitely big time library of information for sure.
And a bunch of different strategies too. And they tell you how to deal with things that go bad. So look at options as like a tool in your tool shed, because you can use options in so many different ways. I've used options to repair a damaged, equity share position that I had in Wynn Resorts is a good example. I was down over $100,000 in Wynn Resorts, okay, back in like 2015. And I used options to help repair that trade and lower my cost basis by selling covered calls. Yeah, okay, so you can use options in so many, that's why it's called options, I guess, right? There's so many different things you can do with them. Let's see here. There was a question here that I just missed, and I think of where the hell to go. Let's see what this one here. CCs, CSP is good enough for many. Iron contours, low. Yeah, I don't do iron condors because it's just, it's 4 freaking legs. It's too much work. Just have two, a naked call and a naked put on either end, get wider than what I could do on an iron condor, cost me less in commissions as well, easier to manage. But I understand why somebody would use them too. They probably just have a smaller account, most likely. That'd probably be the reason why, but I don't think I've ever put one on. Have you?
I've never put one on. I do cash secured puts and naked calls mostly, but I do also use ETFs. I'm obviously the ETF channel, so I better sell some options on some ETFs as well. So I do cash secured puts on ETFs, and it's less risky in an ETF because you remove that that individual stock problem. Some bad news comes out, and it could take that single stock that you have a cash secured put on for a ride, or the other way. You minimize that when you're doing ETFs. Now, somebody once said that they play earnings on selling puts and stuff, and we don't.
Yeah.
Okay, because here's why. Yes, your premiums might be a little elevated prior to earnings, but that's kind of a gamble. You really don't know what's going to happen or how the market is going to treat the earnings of a particular company, because there's been companies that have beat earnings and have tanked. You know what I mean? There's companies that have missed.
Because earnings don't matter what direction of the stock.
So it
I mean, it could be good earnings and the stock tanks, right?
So it's best to wait till earnings actually comes out and then see what the move is. Then you can capitalize on selling puts or calls.
So
Got any questions?
Charlie here. I actually want to get Charlie on. Maybe next week would be a good time to get Charlie on, because if he wants to come on, I don't know if he wants to share his face or anything. I know he has. He's been sharing his face, so maybe he will. But Charlie's been doing a lot of SPX spreads, I think. So I'd be kind of curious to talk about that and why I don't do it personally. But if I'm going to do the S&P 500, I stick to the SPY and the QQQ and the DIA. It's just less riskier than SPX is. But it would be kind of curious to talk about somebody that he kills it, by the way. So it'd be kind of good to have him on and talk about his SPX trades. I think he's doing Apple as well. How's the premium in stock versus ETF? That's a good question right there. Stocks tend to be better than ETFs. And also ETFs, a lot of the times they only have monthlies too. So you're kind of stuck with that. I'm doing ARK-K, which I don't know if I will do those again. I don't know. We'll kind of see. But I do have, QQQs, SPY, and some other ones. I do cover calls on VYM, like 13 contracts on that every month. But which ETFs are you doing, Gerry?
I usually do, and they are a little less premium, but like I said, lower risk, because the volatility isn't there like a single stock usually. But I usually do XLU, which is the utility sector. I'll do XLE, which is the energy sector. I'll put on SCHDs, QQQs, and SPYs once in a while. But ETFs are a good way to start, as long as you don't start doing 3x ETFs as
SOXL.
As a beginner. It's probably not. I don't do 3x ETFs. They're okay. I have dabbled in them, but the margin impact on 3x ETFs is probably 3 times what a regular ETF would be. So it takes it takes up your buying power and ties up your buying power in that aspect. So.
All right, I just put Randy's Discord in there. Like I said earlier, Gerry and I are in there. A bunch of us are in there. Retire the options. Matt, I don't know. Is Matt in there? I don't know if I've ever seen Matt in there. I'm sure he's in there. Some of the gods in there. All Good's in there. Who else is in there? Yeah, he prefers SPX. So this is interesting here. I prefer SPX because it's cash settled. Okay, that's a good point. Sure, sell with SPY. Yeah, okay. He's actually, I don't think he made a video on it. So you can go look at Spending Jar's channel. He's been making videos on it. I don't know if you've shared your net liquid in there, so it's kind of hard to tell how much you're working with. because it makes a difference on what your returns are. But
SPX, isn't that like extremely high dollar?
yeah, it's like 10x SPY basically.
Yeah.
Just in case the price falls in between. Yeah. Plus, you're also doing, you got like a 2-day DTE or 3-day or something like that. It
There's some
expires on Monday.
zero days too. 0-day DTEs on those.
Yeah. Okay. We didn't go over PMCCs. So Matt mentioned that. It's something recently that I just started doing, and we can thank Thumper for that. So, because I was kind of like, what the hell? Why would I want to do that? I own, I got a dividend portfolio here with a bunch of shares. Why don't I just sell covered calls? But I'm like, he kind of talked me into it. It made sense. We all talked about it on our Saturday night private chat that we do, and literally, it's like, yeah, this kind of makes sense. Like last night, I can buy, let's see, sell 30 or buy 30 leaps on AT&T and then turn around and sell the short call side and make $2,000 a month. Like that's not a bad way to go. I mean, you for what, 27, 30 grand or something like that.
Yeah, it was 27,000 invested, and you'll get at least $2,000 a month out of it. Now, the problem with PMCCs is if the stock crashes, you could be in trouble because you need to be able to sell covered calls above your break even on the leap. So
the stock selection is going to be a big one with PMCC. So I have quite a few of them on right now. I got one on AT&T, KMB, Coke. Missed it when the big dip that I had. What other ones do I have on? So I really try to put it on companies that are right around the 52-week low, and they're solid companies that are really defensive. Kimberly-Clark is, they're an ass gasket maker, so they're pretty solid. Coca-Cola, they're pretty solid. Johnson & Johnson solid. AT&T solid. They're not going to go down much more than they're already been down. So they're pretty solid companies to do some PMCCs on. Maybe you just want to talk about what PMCCs even are. Maybe just talk about the mechanics a little bit.
Yeah, well, PMCC, poor man's covered call. So essentially, a traditional covered call is you owning 100 shares and selling a covered call against those 100 shares. Now, you need to own those 100 shares. So you need to buy them with cash on hand, 100% of whatever that share price is going for that day to be able to sell the covered call. Now, with a poor man covered call, you can buy a 2-year leap call, right? Deep in the money. And it'll cost you about, it's roughly, it depends on each stock, but it could be up to half or less than what it would cost you to buy 100 shares. So you buy one leap call, and that one leap call represents 100 shares. And the broker should allow you to write a covered call against that leap. So you're controlling 100 shares with the leap, selling the covered calls at about half price of buying 100 shares. I hope that makes sense. I hope I explained that correctly. The disadvantage is you don't take advantage of the dividend. So you're generating your dividend every single month or every single week, selling covered calls against that leap.
But that doesn't matter, though, because you're going to make 2% in 2 weeks or 5% in 2 weeks.
Yeah, or 7% a month.
I mean, if the stock goes down, yes, you could be in trouble. You're just going to have to go out longer dated expiration dates to get some money, or at least to be above your break even. But there is some downsides. But honestly, I've only been doing it for about 2 weeks now, and so far it's been pretty good. I'm pretty happy with it, and I'm going to continue with it.
What you could also do if a stock drops is you can double down. You could buy the dip. You could buy another leap. Lower your cost basis and sell.
Now you're pulling a thumper here.
You could do that. So that's what I'm leaning towards in my options portfolio and my interactive brokers account. I'm going to have a portfolio of poor man covered calls because I'm the poor man ETF channel. And so I have a portfolio of poor man covered calls, and the other part I'll be selling naked calls and puts. So I think it's a good way to diversify and reduce volatility.
Yeah. Do you sell the at the money calls? Yes, we sell at the money calls, or at least above what our break even is. If we try to remove the extrinsic value, I have a tool for that. Let me answer this question here because this is a good one. So on PMCCs, don't use divvy stocks. No, that's not what we're saying. Matter of fact, you almost want to use dividend stocks because they're a bit more stable. Try to just find stocks that are defensive. They're not going to go down much farther than they already are, and they're literally like the biggest companies in the world, or some of the best companies in the world, like Dividend Aristocrats, Dividend Kings. That's what we're pretty much doing.
Yeah,
If you're doing anything other than that, they're just risky, in my opinion.
I'm on the budget model of poor man covered calls because I'm like, I'm literally the face of poor man covered calls. So I'm running Pfizer poor man covered calls. I'm running O Realty Income, running T, and ED Consolidated Edison, which is a utility. So pretty low volatile stocks is really what you want in a poor man covered call.
So this is an interesting question. I keep meaning to do a PMCC in my paper account because I want to see what the broker does. Technically, I've been hearing some different stories from other people saying that like a level 0, they can't do PMCCs for some reason. Level 0 options approval, which is kind of interesting because it's technically a covered call. So, but I think it might be considered like what, a calendar or something like that. So a spread.
Yeah, I think it's called a diagonal spread or
diagonal.
Something.
Okay.
Or a diagonal calendar or something.
None of us know yet because we've never been in the situation whether or not somebody wants to exercise, and does the broker handle that for you? Do they actually just, go ahead and, exercise the leap and all that? So far, all the ones that I've had, I've closed out manually. And I mean, technically I probably shouldn't have, but it was in profit. Why not just start it over again? So I've been just closing both sides out. I closed the short call out, and then I just closed the long call out first. But we don't know. None of us really knows what happens if somebody on the short call side exercises it, and what's the broker do to the long call side. So we can't really answer that yet. Maybe this week I'll get time to put on a trade. You got to understand, I'm busy working and I'm busy trading all day, and I don't want to take away from making money. So it is what it is. Let's see here. What happens if the short leg gets assigned? I'm afraid. Are you talking about, Leonard? Are you talking about PMCCs? Is that because they would? Let me see. What happened? Yeah, we don't know. I guess I just kind of answered that.
Well, most likely we don't know, but we're assuming that the leap would get exercised.
Yeah, I mean, they're only saying that because of how the broker's treating the margin and all that to begin with. So,
right.
Let's see, which leaps do you buy? That's a good question. I run a tool. I don't know, Gerry probably does it manually. Thumper made a spreadsheet that you can get from Randy's Discord. You can throw the numbers in there, and it'll kind of calculate the break even for you. I just run a tool that calculates the extrinsic value for me, and I can look from there to figure out what strike I want to use for the leap. But to get started, Thumper's spreadsheet is in Randy's Discord, and he posted in there. It's free. You can just copy it out of Google Sheets. I think that's what you're using too, right, Gerry?
Yeah, I'm using that, and I think I'm trying to think of an easy explanation for it, but for me personally, I like to see the value of the leap be very close to what the share price is today. For instance, if you go and buy a leap 2 years out and say the stock is trading at $100 today, and you look at the $50 strike 2-year leap, I wouldn't want to pay much more than $50 for that, because the $50 premium that you pay plus the $50 strike equals the $100 share price that it is today. Now, that you usually don't get it right on the money. You'll pay a little bit more, but you'll have to move up the strike ladder of the leap option chain to find out where you can get that close, where you can get those values close. I hope that kind of makes sense.
Why diversify if you're not holding the stock anyways? Would it not be better to just sell multiple calls? No. I mean, what if that stock, they had a lawsuit? What if they, tanked? I mean, that PMC is going to be effed for quite a while, where you're going to have to just go out long days to expiration to make any money on it. So diversification still plays a role in PMCCs as well.
Well, and you can do PMCCs on ETFs on the SPY, but I wouldn't do it on some crazy stuff like growth. You want, like I said, you want low volatility stocks and ETFs to be doing that.
Yeah, I haven't done one on ETF yet. I don't think that the returns were quite as good, but I mean, it's all risk, right? Like, okay, it's less risk. You're not going to get paid for that. Let's see here. Auto exercise. That'd be interesting. Okay. See, and I think he mentioned that. I mean, I think he's out of the U.S., so I don't know about all the rules outside the U.S.
Yeah, they got some crazy stuff out of the U.S. Each option contract, $25. Woo.
Oh yeah. I spent. Let's see, what did I spend? $260 in the month of January in commissions. Okay, that's the cost of doing business, as Randy says. $260. That sounds like a lot of money, but I made $6,000, so it's not a lot in the grand scheme of things.
Yeah, I honestly don't even pay attention to that anymore, and I probably run way more trades than you.
You probably do. The thing that's funny about it, though, is like you got to pay for market data in Interactive Brokers. And it's like, I don't want to pay $20, but if you have like over $30 in commissions a month, it's free. And it's like, am I going to hit 30?
Yeah, for Interactive Brokers, for anybody interested, it's not for the beginner trader, because there is costs involved. So if you're more active, then Interactive Brokers, I think, is the only way to go.
I have been using Interactive Brokers for a very long time, about 9 years now. And I've seen good things, bad things. I can tell you this, they're not a hold your hand broker. They're a professional broker. They expect you to know what the hell you're doing. And they're not going to hold your hand. So if you want to hold your hand broker, then go to Schwab. But there's issues with Schwab because they don't really have a good platform. Number one, we don't really talk about that. We're not using phones for this. Okay. Now, some people do. I'm an old school person. I need a fat client on my PC and I need to trade from a platform. I'm running scripts. I'm running, a lot of different, I got a bunch of windows open. I got to look at charts. And from a phone, I'm just too old school. I'm a Gen Xer. So, but that said, you have to go through an approval process, and that's in every broker. You're going to have to deal with that. It's not specific to that broker. It's like a SEC requirement. So they're going to ask you questions: what your net worth is, how much money you have in your account, are you going to put in there, how much liquidity you have, and how much experience you have. If you have never traded an option before, it might be tough to get approved in some of these brokers. Fidelity, for example, maybe a little bit Schwab. Robinhood gives it away in a gumball machine for free. But if you have to start with Robinhood to get some experience under your belt, that's a good way to go. Get a year's experience under your belt. And then when you go to a better broker, a real broker, you can say, hey, I got years experience doing this, and they might approve you a lot quicker, a lot easier. Maybe, did you get approved in Fidelity?
I did, but it took a few times, and it took a phone call to get approved. And they actually I don't know if I should say this, but they actually coached me through how to get approved in Fidelity.
Lie on the questions.
Yeah. They said basically enter what they want to hear, because it's an algorithm basically that they run it through, and if you don't meet certain criteria in your questions, it just kicks you out. And so yeah, if you don't have experience, you might have to go with Robinhood, unfortunately.
Yeah, it's the same issue that I've been talking about for years. Like, how do I get this job if I don't have the experience to get the job? So it's one of those types of things. But there is different options levels that they approve you for. I think with interactive brokers I think it's just on or off. Like they give you everything or they don't. I don't know if there's option levels at interactive brokers, so they might be a little bit more strict. Now, granted, when I was approved for, was nothing like that years ago. So I think it has to do with a lot of these people killing themselves and making mistakes and stuff. The suicide Robinhood example, that they're putting the brokers are just clamping down a little bit on that, because I mean, look at the GameStop is a good example. That people got hurt really bad. Some good questions here. Let's see, what's this one? Buying puts is insurance. Yeah, I mean, technically, selling puts or buying puts is insurance. You kind of look at it that way. I've never done it. I think Cloud Ninja does it. To me, it's like it's a waste of money. But I think Retire with Options. Not Retire. That's Randy. I think Retire does it as well. It's not a bad way to go. It's just, to me, it's like whatever. The market goes down, I'll just buy more. Let's see here. Use for sure. Stock tank. Blah 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 blah. Let's see. Here's one. We pay a fee on interactive or IBKR to interactive brokers if we get assigned to. I don't think there's any fee for that. I don't know of any broker that charges a fee for that. Matter of fact, it's actually a good way to get out of a stock without paying a commission. So we used to use that back in the day on when commissions were $7-8 a pop. You just sell an in the money call against it, and guess what? Boom, there you go. Make the money plus you get taken away for free. Webull. I don't have any experience with Webull. I think Investing Sensei is using Webull, but I don't have any experience there.
I got my free stocks from Webull, but yeah, that was it.
Let's see, no expense. Let's see, filled stuff on. Okay, so TD is not a bad place to start either if you can get if you can get approved. It's still, you're going to go through the same thing. You're going to have to go through the approval process, or ask a bunch of questions, and if you're honest, it might be hard to get approved. But they do have a good platform. TOS is a great platform to learn options on, in my opinion.
Honesty is the best policy, Dave.
You didn't hear from me that said to lie on those questions. Because I don't know. I haven't ever had to really deal with that. So I admit I never lied on it, but I never had to, because I have a lot of experience before they really clamp down. I mean, so margin, I don't know what margin that TD gives you. They're going to get sucked into Schwab at some point in the next 1 to 2 years maybe. I think Schwab is only 2 to 1. So
I think when they talk margin there, they're talking about being able to deposit money and have it being available immediately, or selling a stock and having those funds being available immediately. That's what
the settling period.
The selling period.
Settling, yeah.
I have margin on in Fidelity, and but my cash balance would still secure the cash secured put. So it's not like interactive brokers. So you still need 100% of the cash if you were to sell a cash secured put.
So Mark mentions that they have a good platform. The platform actually looks pretty impressive, I'm not going to lie, but I really just couldn't tell you if it has all the other bells and whistles that I would want personally for myself. I've been using interactive brokers for so long that the platform it just gives me everything I need. Plus, I've got hours of writing scripts against the API, but I don't use a phone. And honestly, I mean, unless I was in a pickle or something like that, I probably wouldn't ever use a phone. There's just too much going on. Eventually, I want to get more passive with it. So, I mean, it's just do longer days to expiration, like monthlies or something like that. But I couldn't imagine trying to do this from a phone. And just to say that, Schwab's platform on the phone sucks for options. All right. So TOS isn't too bad, but the Interactive Brokers app's not too bad either. But Schwab sucks. I'm not going to lie. I do covered calls from it. It's a pain in the butt. I don't know how Fidelity's is. I can't really talk about that one.
Yeah, it's sucky. It is.
I think a lot of the options plays on the phone were kind of like an afterthought.
Yeah. Leonard has a good point right there. If you can bring that one up.
Which one?
Oh, it's up a little ways. We'll go this one though first.
Okay, so when you sell calls in IB, do you need to link it to the stock or something that is automatically linked to the shares in your account? No, you don't need to do that. So there's a couple different things you could do. We would just touch on this real quick. There's a strategy builder in there, which kind of lets you, if you're doing a spread or something like that, or a PMCC, for example, you could put it all in one ticket. And Gerry and I have messed around with that. The biggest problem with that is the spreads on each one of the legs. You don't really have a say in what gets selected there. So it's kind of just an all-in-one price. So you could really get effed. Leaps have like a $2 spread sometimes. And you want to start in the middle and try to, you really want to try to negotiate down or up depending on if you're buying or selling. Just don't take the bid or ask because you're going to literally mess yourself out of a couple $100 probably. So that's something to be concerned about. So both Gerry and I put on individual legs if we're going to do some sort of strangle or PMCCs, and this is a good example because we have say exactly where we're going to pick up on the top side of the strangle or the bottom side of the strangle. We get to pick those prices. Which one did I miss, Gerry?
There was one about 5 up from Leonard. It says, if we can, there you go. If we consistently make money selling options, there must be someone on the other side that's consistently losing money, right?
Exactly.
Yes, yes, absolutely.
Be the person be the house, be the right person that's making the money.
And if you look at that, the people that make money selling options, the ones that are losing more often are the buyers.
Absolutely. Now, when they are right, they're making a killing. Don't get me wrong. They'll probably make a killing, but it's like they're going to probably, miss 10 trades where they're all losers. And they're going to have one that's going to be a big time home run. Those, other ones probably out and they'll be in a small profit. And then they'll start the whole process over again. How do I know that? Because I've done it. So, let's see here. Did I miss any other good ones here? Schwab. Let's see. What's this one? Schwab can automatically set an ask price. Yeah. I haven't had good luck with that. I think Allgood was talking about it last night, actually. Sometimes they don't let you do a mid price on some stocks. Sometimes you got to go with the bid price, and then they'll automatically do a price improvement. But I can tell you this, there's been times where I had been in Schwab, because I do have a Schwab account. That's where my dividend portfolio is at. I do covered calls in there. That I've selected the bid price, and then that's the price I got. Didn't give me a price improvement. This is something that came up on Thursday's Randy's Discord talk that we go through. It's best, if you can, to have separate accounts for your dividend portfolio and for what we're doing here, okay? Because if you were in a situation where you had you made a mistake or something like that, and the brokers want to start liquidating some of your positions or whatever, you don't want them starting to liquidate your dividend portfolio. That's a good point that I think PD brought up in that talk. I have a completely separate account for my options trading, other than covered calls, which you're not going to get messed up on. There's like zero risk to what I'm talking about here on covered calls. So yes, you can sell covered calls in a dividend portfolio and you're fine. There's zero risk to what I'm talking about here. But if you're doing, naked calls and you're doing cash secured puts or naked puts, strangles or anything like that, then have a separate account for that.
Absolutely. And I just sold out of all my stock that I had in Interactive Brokers because of that. I didn't want that to happen to me. So because I'm such a poor buy and hold investor, I opened up my wife an M1 finance account, and she'll be she'll be our buy and hold investor of the family. So
what was this question here? I forgot to mention no more than one leg per trade and no spreads
he's
nor
talking
poor managed
about
covered calls are allowed.
he's talking about across the pond.
Oh, yeah, like that's like a level 0.
Oh, he's in Canada.
Yeah, they're trading 212 or Quest Trade. I think he's using Quest Trade out there. I don't know anything about Quest Trade. It's kind of, maybe, you know what? Maybe Basil will be welcome to come on sometime in the future if he's willing to. I mean, he shows his face on his videos. I think he's using Quest Trade. He's in Canada. Yeah, let's see here. I just talked about you, Petey. You still using, yeah. I don't know who he's talking to there, but I'm never going to stop using IBKR probably. I mean, it's a game changer platform. You're going to get really good fills there. Robinhood, it might have a low barrier to entry to get in, but you're going to pay for that with crappy fills. I think that Gerry and I were going to move over there real quick to do Iron Condors when we were working on the IC debacle for quite a while because it was free. 4 legs is kind of expensive, but like Randy said, he couldn't even get filled on Iron Condor. So
yeah, with Robinhood, I mean, yes, it's free, but you are
per se,
per se in air quotes, you are paying for those commissions because Robinhood's not eating that cost. Okay, there's that cost is still there. It's just you don't see it in your face.
it's like Office Space where they're siphoning off a penny for millions of transactions. Think of that. This is an interesting one. Have you ever tried to sell an option close to the ask and then immediately tried to buy it back close to the bid?
I try to do that all day, every day.
That's harder than it sounds.
Yeah, it's very difficult.
Most of the time, Gerry and I were talking about this the other day. Like, we always try to mess with the midpoint price, and if it takes the midpoint price like right away, you probably could have had a better price. We were talking about that last night, actually. Definitely mess with the midpoint. Don't go with the bid. Don't go with the ask. Definitely try to mess with those prices. Otherwise, immediately when you fill, you're gonna be in the red. We'll probably go for an hour and a half. This is like the beginning episode or something, so we'll go for an hour and a half here. So if there's any other questions, I did add some moderators in there, some people that I knew for a fact would probably join. So thanks a lot for modding the chat. Quest Trade is good. Yeah, I've seen, I've heard good things about it, but I don't really know all the details behind it. Maybe I'll have to ask Basim if he's welcome to come on and share, how much the cost is and, how hard it was get approved and all that stuff. It'd be kind of interesting for the Canada folks.
Spending Jar has a good one there. Have you tried calling IB to lower your commission costs? There's actually a setting in TWS.
Lots of settings in there
that you can adjust the way that they route your order, and it could be you can prefer a cheaper commission, or you can prefer a faster fill. So there's a lot of options in that think
of Interactive Brokers being like a space shuttle as far as options are concerned in this damn thing. There's so many tools in there. It's ridiculous. Compared to like Robinhood, where it's like a 1950s, with the amount of dials in the car, 1950s Cadillac or something.
It's got roll-up windows. For
It's
something,
not a
probably
Cadillac.
people
It's a Chevy. Sorry.
never even seen a roll-up window.
Yeah, exactly. You had to get away from those roll-up windows when the cars got bigger because you couldn't reach onto the other side to roll it down. But here's one here from, let's see. Do you ever do market order and options in Schwab? I never do market orders. No, there's no reason to. And it's strictly limit orders for me, and I mess around with the prices because you're literally screwing yourself out of dollars if you're going to with a market order.
Yeah, with an option, you got to remember every penny is $1. It's not just a penny; it's $1,
Right.
and you don't want to lose.
You can always almost get the mid price. You're the one who's normally walking it up or walking it down. We talked about that last night, but yeah, definitely try not to do market order if you can. Let's see, not losing to get insurance. Schwab automatically. Yeah. What's this one? I already think I did that one.
Yeah.
Oh yeah, no. Oh yeah, I did answer that one. Sorry. Someone at the bottom I probably didn't get to yet. I apologize. We'll go for another 10 minutes. So if there's any other questions, how much would it cost? Yeah, sounds like a freaking Gerry question right there. Hey, damn woodchucks, quit checking that wood.
I would say a lot, or as much as possible.
Yeah. IBKR has tools for everybody, too many for me. It's like, because it's not just for options, right? I mean, it's for futures traders. It's for people that do Forex. It's an a la carte trading platform. So I used to trade futures a lot on the ES, and I'll tell you what, you can do futures if you want to. There's a basket trading, there's ladder trading. It's unlimited. That's the problem. It's like literally, it could be overwhelming. I think even All Good even said that. It's overwhelming. It can be, for sure. I did a video on how to set options trading on there. That's just the way I set it up, but you can set it up any way you want.
Yeah, it's definitely overwhelming at first. When I first got in there, I'm like, what the hell am I looking at? But you work at it and you'll get used to it.
Yes, I use smart routing as well. I don't mess around. I've been using smart routing for years. I don't mess around with going in there or changing. And they have a couple different options. Well, Gerry was talking about, but they actually had other options too back in the day when commissions used to be $9 or $10 a pop, at Scott Trade and TD Ameritrade and all that, that you could do like lots. So the more shares you did, the more expensive the trade was. Or you can just do a fixed price of like $5, and it didn't matter. You could do 30,000 shares, it'd still be $5. But if you did 30,000 shares on the lot price, it would be like $30 or something. That's the way the pricing used to be. They still have the option to this day.
Yeah, the one, if you're looking for maybe cheaper fills, I think there's smart routing with max rebate. I think that's the wording in there. If you're looking for cheaper fills, now you'll get a range. You'll still get a range. It's not a fixed price, but that's what you want to look at if you're looking for lower commissions and probably slower fills.
Honestly, I think the most I ever paid for like one maybe is like, it's like what, $1.50 or something maybe per.
Yeah, that's about
it's not
where
bad. And sometimes, honestly, you get paid to trade, which is kind of funny too.
I haven't been paid to trade, but I've had them as low as
several contracts where they pay me commission to trade it. So
yeah, I'm waiting for one of those. I'm like, dang it, I ain't getting one of them. But
yeah, it happens every so often.
As low as 20 cents or so.
What's the best way to get women with your stonks money, Dave? Yeah, you tell me. I'm still waiting. Let's see here. IBKR has great tools. Yeah. So let's see, snapshot of the current. What's this one? Should I get to a snapshot of a current bid ask option one cost penny? What? I'm lost on that one.
Well, there's there's if you're not like in interactive brokers, if you're not subscribed to market data, you can click and it will give you live data, and it costs you a penny each time you make that click. So
I wasn't aware of that, because Thumper, for example, he doesn't have live data. He uses a data feed from it,
yeah.
from TOS platform, and then he puts the trades on interactive brokers. So it's just delayed, I think. So he can just look at TOS, pick the price out of there, and then put the price in interactive brokers. But to me, it's like I pay for data feed. I pay for a couple of news feeds because I want to get the earnings. My script actually checks earnings as well. It lets me know what the earnings are before I put a trade on. So I want to know. It's just something I add. That $5 a month for that earnings data to me is worth it. Because if I just save myself, out of one bad trade on earnings, the $5 will pay for itself.
Yeah.
One question maybe is just a bug that happened one time. I sold a credit spread on XSP, and it was combined order. Next day I woke up and it was separated. How is that possible? Well, technically it's separated anyway, really. Like interactive broker groups sit it together with a plus minus, but it's really, I mean, it's like you can sell one leg or buy it back, whether or not it's put in one ticket or not. Are you using IBKR? So I don't know if I don't know if he mentioned that.
I don't know.
You still joined late. You still trust IB after the strict trading? Yeah, because I think every broker is going to do the same thing. It's not, they're covering their ass. They're CYA here, right? They are literally protecting themselves. And this is not even a SEC requirement. They're going beyond that, in my opinion. And we talked about that last night too. Like the SEC requirement is they give you time. They send a letter to your house, snail mail it, right? Put more money in, blah, blah, blah. Otherwise, we're going to liquidate. This is happening so fast that the brokers need to protect themselves from losing a bunch of money. So I don't blame interactive brokers at all. They're protecting themselves. Now, granted, I think it might have been Randy talk about it last night, but the CEO is kind of a dumbass. I'm not gonna say that. I should have said that on the live stream, but he's just not the best spokesman on CNBC. Please don't hurt me. Please don't undo my account. I should cut that out. Let's see here. He's just not the best spokesman. Jeez. He's not a dumbass. He's probably a billionaire. Let's see. Dave, explain why NIO has best premiums. Because it's a risky stock. You're paying for that. You're paying for that risk. Let's see. You're getting paid for that risk. It's a lot more riskier. I did some trades on NIO, but it's not something I touch anymore. Mainly because the Chinese can clamp down anytime they want on that stock, just like they did last year, and I don't want to be a part of that. Let's see, what's this one? If it's my money on the line, how are they covering themselves? Because there's leverage involved. You're using too much buying power. They're gonna have to liquidate some positions, otherwise there's like unlimited amount of risk when it comes to a naked call, for example. If you don't have enough money in your account because you're leveraged, they have to liquidate. So they're trying to protect themselves. The best thing is, you could probably say that is just make sure you're not putting yourself in a position where they're going to have to do that to you, because you're going to get, there's going to be no lube involved with that. I don't know how else to put it. Would be nice if you could do a video of you selling. Yeah, actually, I might do that. Gerry and I were talking about trying to record our screens all day. The problem is I'm in and out of work and virtual machines and stuff all day long.
I might be able to put one of those together. Yeah, we'll see.
Yeah, I think I could do one, because I'll probably put one on early on Monday morning anyway. Maybe we'll see. I'm just looking at the futures right now. The futures are actually kind of flat, so not a big deal. Let me try to get to the bottom here. Is there anything wrong with selling the April 19th 30 put on GME?
Yes.
Ooh. Yeah. What if the stock
Yes.
drops to $6? And then what are you going to do?
That's that's what I've been saying. I know there's a lot of people making good money on GME. You know, there's no doubt. But at the end of the day, GME, GameStop is still GameStop, regardless of what's happening in the market. GameStop fundamentally is still what it was 2 weeks ago, which is a $15 stock, whatever it was, $20 stock. It's still that company. So
My question is, why would you even want to do it anyway? Yeah, I mean, I don't know what the price of that particular option is, but to me, like the risk to reward, I mean, you got to take the stock at $30 if it's below, but the stock can drop literally because we all know that that stock is not worth $30 billion. I mean, literally that stock is, what, 500, $700 million company before it pumped way up. It's not worth anything. So to me, it's so much risk there. Why risk it? Like I said earlier in the stream, why? Yeah, premium is $1,000. Okay, well, I mean, I can make $1,000 in a week. I mean, it's going to take a lot of work, but I can make $1,000 a week doing options with zero risk, or not zero risk, just not risk like a game stock would be, right?
yeah, I think, I mean, if you're going to sell puts at this point in the game, I would be down towards or at or below what they were trading at prior to this run up.
Exactly. Yeah, why? You're asking for trouble. I mean, I don't even know how to say it. I mean, if anybody takes anything from this live stream, don't do that, please. PD is a good example here, so I don't even want to bring him up because maybe he wants to keep it private. I don't know. Well, it's been an hour and a half. Maybe we'll do this again next week. Maybe somebody else wants to come on. Gerry, you're always welcome on anytime you want.
Yeah, you guys put it down there. If you want me back next week, let me know. Put it down. Put some comments down.
Maybe you want to be just a regular host as well.
Yeah, if you wanted to be the Dave and Gerry show, let us know. But I'm happy, letting somebody take my place if you guys want to see somebody else's ugly mug besides mine.
Because, I mean, maybe Charlie would want to come on. It would be nice to have his story. Maybe Basim will come on, talk about a little bit about the Canada side.
Sure.
Maybe Petey would be willing to come on as well. But anyways, I hope I answered a lot of these questions. I might have missed some. I apologize if I did. But go ahead and hit Randy's Discord up, and you can always ask questions in there. So you want to say goodbye, Gerry, and end it?
Yeah. Thanks for having me. Thanks for having me on the inaugural Options Sunday evening with Dave. We got to come up with a title for that, but appreciate all the questions. I'm glad to be here. Check out my channel. I don't do options very much, but who knows? In the future, it may roll into that. But definitely check out my channel. Make sure you subscribe to Dave's channel from the people that came from my side. So thank you very much.
Thanks for joining, Gerry. I know I referred to you a lot, and part of the reason I do that is because I'm trying to look at questions, and it's very tough for me to do that, probably answering questions at the same time, and it just kind of lets it's kind of double teaming, right? Or playing to be a team player here. While you're answering a question, I can kind of queue up another one. But
I definitely like answering the questions. So
yeah, and that's part of the reasons why we're doing this. We don't want to just talk about ourselves. Yes, Basim is the guy that sold us dividend portfolio. I made a video talking about the same thing, but I do want to have that coma money, right? So, but until next time, everybody, thanks a lot for joining. Let's go ahead and do this next week as well. We'll get some other questions answered. So we'll see you in the next video. We'll see you in the next live stream, everybody. Have a great week. and be safe. Thanks a lot.
See ya.